My name is Abby Augusta. I'm FinDev editor, and Daniel Contreras is here with us for technical support. He's available to answer any questions about audio or video issues that you may have. And just before we get started, I wanted to share a couple of notes on logistics. Attendee microphones will be muted during the entire webinar session. So in order to ask questions during the webinar, please use the chat box on the right-hand side of the Zoom window. Make sure that you select everyone in the drop-down menu so that your questions will be seen by everyone, including the panelists. And finally, the webinar recording will be available on our website once this webinar is finished, and we will email it to all attendees and registrants. And now I will hand it over to Daniel Rozas to get this webinar started and introduce the agenda and the panelists. Thank you.
So good morning, good afternoon, good evening. Great to have you here. I wanted to start this with a very brief story, and I hope you'll forgive me. It was a cold, moonless night. A light fog was spread over the water as a ship steamed ahead. Suddenly, a dark form emerged from the fog. Frederick Fleet, the lookout on the crow's nest, rang the bell thrice and called the bridge, "Iceberg ahead." But alas, it was too late. Now, we know the story as the Titanic, for whom the fog lifted too late. But for us, it's not too late yet. Like the unfortunate Frederick Fleet, many of us, many of you, are still probably navigating in foggy waters. Because for us, data is like radar is for ships. And since the closure of mixed market a couple of years ago, our sector's data has been shrouded in fog. And now I wanted to present to you this new radar that we have, the Atlas Data Platform, so that we and you and all of us don't have to sail in the fog anymore. As the chairman of the Atlas Steering Committee, I will briefly introduce you to the Atlas platform, but we have three truly excellent panelists to tell you the full story. So we have with us Lucia Spaggiari from MFR, who is the innovation director at MFR, and she really is, in my mind, the heart and soul and the inspiration for Atlas. And Atlas wouldn't be here if it wasn't for Lucia. So I think it's a great opportunity to hear her share what they've been doing with Atlas. We will also have a presentation from Alexander Sotiriou from CGAP. CGAP is a think tank, has this, as a think tank, has a sort of a high-level view of the sector. And one of the things they do is rely on data analytics to understand what's going on. And so Alex will share with you how CGAP has relied on Atlas for their analytics, especially during the pandemic. And finally, we have Pauline Dubin from PROPARCO. PROPARCO is part of the Agence Française de Développement, the IFD group in France. And they have been one of the early supporters and adopters of the Atlas platform. And Pauline will actually share with you their experience using Atlas as a supporter and also as a subscriber. But maybe first a little bit of background on Atlas itself. So I think next slide, please. So Atlas is a data platform for centralizing both social and financial data. By data, I mean data that represents the operations of FSPs, of financial service providers. The platform by now covers 138 countries, 1,500 providers, and actually has as many as 3,600 FSPs that have data reported. So it's quite an impressive platform to use. It's managed by MFR, and there's a whole level of governance and sponsors that oversees. As I mentioned, I'm a member of the board, of the advisory board, and you can see all of the many important organizations that are part of that. The Atlas is also particularly impressive in that it's already sustainable. So it's an operation that really relies on subscriptions, and since just 2 years in operations, it's already covering 90% of its costs. So I think it's very impressive. And starting next year, they expect to be running fully sustainable. So that's a landmark achievement in our sector that I don't know of anybody who has done that as an infrastructure organization. So subscribers, as some of you might be interested in becoming one. There are currently 16 subscribers. The fees are really vary a great deal in terms of what type of a user you would be and the size of your organization. They vary from as little as €1,000 a year to up to 20,000. And you can see a list of subscribers here. It's quite big, and of course e-MFP, of whom I'm also a member, is also a subscriber. So a little bit on how Atlas operates. Lucia will tell you the full story, but basically the data for Atlas is provided from a whole variety of sources. So it includes data from certainly MFR and its ratings, but it also has data from Cerise and the SPI4 audits that they do. It has data that's provided by investors and microfinance associations. And in addition to that, they've imported historical data from the mixed market and also microfinance transparency. So you're really sitting on a very, very broad platform with everything in one place. And as a potential provider of data, you can choose to provide the data either openly, or you can also provide it on an anonymized basis, which is not disclosed to the users. And that data can be provided on any kind of frequency, as you know, could be annual, could be as much as every quarter. So it really depends on the needs and how you want to use Atlas. And then finally, before I turn it over to Lucia, Atlas has added another level of what they call a reliability score, which allows you as a user to see how much validity there is to the data, how much verification has been done. So things that have full third-party verification, like a rating, would get the highest reliability score, and then lower levels for different types of providers from there. So I hope I've kept this short. I want to turn it over to Lucia, who hopefully, Lucia, can you show us how Atlas actually looks in practice?
Thanks a lot, Daniel. Welcome, good morning, good afternoon, everyone. It's a pleasure to be virtually with you today. And first of all, you have been too generous, Daniel. Let me thank my MFR colleagues, because without their energy and commitment, this would have not been possible. It's a pleasure to work with you guys every day. So let's see how this looks like in practice. Atlas subscribers can navigate data through this menu, including different pages. Let's see, first of all, the free search page. Free search is probably our mostly used page, and it is the most flexible one. Indicators are available for different families of categories. We have financial indicators, social ones, client protection, etc. Here to the right, I have already pre-selected some financial indicators, to which we can add a few social ones. Loan size. And then number of borrowers, but also rural borrowers and female borrowers. Next, we can decide what we want to see. We can select a region, a sub-region, one or more countries, financial service providers, specific years. Additional filters are available also for the size of financial service providers, whether they take deposits, their regulatory status, their charter type, their lending methodology, etc. We can also decide if we want to include a benchmark to compare our selection to. And the filters for the benchmark in this case mirror the filters for the selection. Let's keep it simple for the first use case and say we want to review one financial service provider compared to its region, which is South and Southeast Asia. For each of the indicators that we have selected, we get one graph. Portfolio at risk more than 30 days, restructure portfolio, portfolio yield, and so on. When the indicator is plausibly associated to a positive contribution to a sustainable development goal, the SDG icon is flagged. In orange, we see the selection, in this case, one financial service provider, and in blue, we see the benchmark, in this case, South and Southeast Asia as a region. The default returns the data of the last 3 years. And here, for example, for the benchmark, I can see that the average is calculated over 354 financial service providers. By clicking once on the graph, I can see the trends over the years, both for the selected financial service provider and for the benchmark. If I want to normalize the composition of financial service providers, for example, in the benchmark, I can decide to only show organizations with data for all periods. Graphs can be downloaded, saved to PDF, exported as an Excel, as you prefer, and all the graphs work in a similar fashion. Searches can also be broader. For example, I may wish to see how portfolio yield is doing in Kenya compared to Eastern Africa. So now here in orange, I have not one financial service provider, but several from Kenya. And in blue, I have Eastern Africa as a sub-region. And I can see some effect of the crisis, but also some positive sign of partial recovery. I may even be broader and choose all of the 6 regions for a global view. For example, for portfolio at risk more than 30 days. And I may wish to review trends over the years, semesters, quarters. In this case, it may be interesting to compare the quarterly trend in PAR 30 to the quarterly trend in the restructured portfolio. Or I may wish to appreciate differences in PAR 30 by region, sub-region, or by charter type of the financial service provider, the regulatory status, its size, by groups of financially self-sustainable organizations and non-financially self-sustainable ones, by status with deposit taking, or by lending methodology. Now let's change perspective and say we are an asset manager wishing to monitor a portfolio of financial service providers across these indicators, mainly financial with a few social. To do so, what we can use is this filter portfolio. I will select sample portfolio 1, Please note, this is not a real portfolio, but a mock-up one done for this demo. And it is only composed of 6 financial service providers, so that I can compare it to the 6 countries where these investees operate. What I can see now in orange is not one country, not one financial service provider, but it is the simple average of the investees in this given portfolio. And in blue, I have here the average of the FSPs operating in the same countries where the investees operate. In case, in addition to the portfolio average view, I want to see the individual performance of the FSPs composing the portfolio, I can decide to show data by FSP. The portfolio menu is private. This means that only when the owner of that portfolio is logged in, she will be able to see her portfolio in this menu and not other subscribers. However, asset managers and international networks can decide, if they wish, to grant the permission to, say, asset owners to be able to see their portfolio on Atlas. Let's assume this permission is granted. What an asset owner could do in this case is she could review sample portfolio 1 against not a number of countries, but rather another fund, for example. Sample portfolio 2, please note this is also a mock-up and not a real portfolio. So in this case, it may provide more comfort to an investment negotiation, for example, to be able to see independently some comparable figures from the FSPs of Fund 1 against the FSPs of Fund 2 and trends over time. Now let's change perspective again and put ourselves in the shoes of a financial service provider sharing data with Atlas. By doing so, a financial service provider gains access to benchmark overview, where for each of the indicators reported, one financial service provider can see her own data in orange. This is a mock-up account against a benchmark, which is the region if the financial service provider agreed to share data with Atlas subscribers in a nominative manner, or it is global if the financial service provider agreed to share data with Atlas subscribers in an anonymized manner. The options available here are simpler than what is available to subscribers, but this is for free. Now, other items included in the toolkit available to subscribers include page trend, which is financial and risk oriented. Here we can take the example of one financial service provider anonymized, where we can review over time trends in profitability and sustainability by using return on assets, return on equity, operating self-sufficiency. We can compare over time portfolio yield to the key cost components of the organization, operations, provisions, and finance. Portfolio quality combines portfolio at risk more than 30 days, write-off ratio, restructured ratio, and compares to the risk coverage ratio. Some productivity metrics are available in addition to the structure in value on the asset side and on the liabilities and equity side. Now, pricing is a totally different story, and this page builds on the great lessons learned from the Microfinance transparency, which is an initiative that had to be discontinued in 2015, but was leader in analyzing transparent and responsible pricing. Here we can make the example of one institution and compare it to its country. We can see here on the vertical dimension the full annual percentage rate, including interest, fees, mandatory insurance, and all the components that are needed to be able to compare apples with apples. On the horizontal dimension, we have loan size, and the orange bubbles represent the loans of what we have selected, in this case, one financial service provider, while the blue bubbles represent the other financial service providers in the country of this selected organization, Bolivia in this case. The dark blue line is the average for the benchmark, and this is what allows us to understand how the pricing of a given financial service provider compares to a given market. So here the inverse relationship between pricing and loan size is quite clear. Another interesting relationship is between pricing and loan term, similarly inverse, as well as between pricing and interest transparency index, which is a measure of how distant APR is from the nominal interest rate. Because pricing can be pretty complex, additional analytical tools are available, for example, to review loan segments using at the same time loan term and loan size, as well as profitability and cost indicators for the financial service provider to put always pricing into the financial context. The client protection page is aligned to the Ceres SPI4 standards, former Smart Campaign. We can see it through the example of one institution in Uganda compared to Sub-Saharan Africa. So first of all, we get the score for the 7 client protection principles on average. In orange, we see the institution we have selected, and in blue, we have the benchmark. Follows the detail on the performance by principle with relative strengths and weaknesses. Additional details are also available in the form of comments and trends. Now, this page is dedicated to the Ceres SPI4 tool. We can make the example of Izwe Zambia against the global benchmark. And we can see that the average score for this organization on the Universal Standards of Social Performance Management is 56%. Then we have the different dimensions of the SPI4 tool with their score. We can see the detail by essential practice within each dimension in this section, a deep dive on client protection principles, as well as a comparison between our selected institution in orange to the global benchmark, in this case, blue. Atlas technology allows developing new modules in a relatively agile manner. For example, in 2020, MFR partnered with the PayGo Perform group composed of CGAP, Gogla, and the IFC, and many pay-as-you-go off-grid solar firms to collect data and pilot test the calculation of key performance indicators on the financial and operational performance of these firms, as well as their portfolio quality. The findings of this pilot are available in a report, and the data was aggregated on a dedicated Atlas module, which is called, surprisingly, PayGo Perform. where you can find indicators specific to this industry, which are the pay-go-perform KPIs, as well as filters adapted to the different business models of these firms. For example, collection rate, outstanding receivables, and contribution margin. With this, let me thank you for your attention, and please invite Pauline from PROPARCO to share her experience. Please, Pauline, the floor is yours.
Yeah, thank you, Lucia, and thank you for this great introduction. I will. So yeah, first, hello everyone. I'm Pauline Dubin. I work for PROPARCO, which is the French DFI, and I work on debt and equity transactions with the microfinance institutions or microfinance banks across the world, as we do not have any geographical limits. So today I will tell you a few words about how we've been working with Atlas for the past year. So PROPARCO engaged with Atlas in 2020 after the closure of mixed markets. We chose to work with Atlas on our reporting flow from our investees, and so we communicated to our investors that we had partnered with Atlas, and we asked them the level of transparency they would like to share with the other Atlas subscribers. And then we defined with Atlas indicators that we would look at in our reports. So first of all, I will show you so the basic, like how it works and what Atlas sends to our clients for their report. So this is the Excel file. You can see my screen, I think. This is the Excel file that Atlas sends to our clients and that our clients fill in and then send back to Atlas. So we chose to make it as light as possible because we know how heavy the reporting burden can be for our clients, for the FSPs. So first of all, you have very general informations, and there you got the transparency option that the clients can choose. Then they go for general contact information, basically. And then you start to have loan portfolio information, GLP, Part 30, restructured. Then we ask for more details about the GLP, about segments, but also about sectors. And we also ask for number of staff, number of branches, and then we look at asset quality data. So basically that's what our clients receive, what they fill in and send back to Atlas. And then what Atlas does is that they collect this and they perform a quality control on this data. And so if the data seems to be incomplete or incorrect, they come back to the client and ask for more details. And once they are sure that the data is clean, they upload it to the Atlas platform. So now I will show you, so from a social investor point of view, how I use Atlas. So for instance, if I need to know how an FSP I'm going to talk with has performed on the last semester, I can go to benchmark overview, and then I can choose among the indicators I have which one I want to check. So here you already have. Yeah.
This is Lucia speaking. Would you mind sharing again? We still see the Excel, unfortunately.
Oh, sorry. Thanks.
Thanks.
Thanks for being my eyes. Nouveau partage écran. Can you see?
Yes, we can. Thanks.
Great. Yeah. So sorry, everyone. So yeah, this is the Atlas platform that Lucia already showed you. So you go to data, benchmark overview, and that's what I get. So I can choose several indicators. Here you go with number of borrowers, percentage in rural areas, percentage of female, par 30, par 90. But if I want, I can also check staff turnover ratio or whichever indicator I want to check. And then I choose the FSP I'm thinking about. So for now, we'll have Vitas in Palestine. And so you go for search. Well, it was already uploaded, but and so then we will have the graphs that Lucia showed you. So this is the graph. If you click on it, you get the year by year version. This is Vitas compared to its benchmark, which is MENA. And then you can compare, as Lucia told you, like Vitas against benchmark for rural, female, par 30, and it goes on. You can always download, you can always print. This is a very user-friendly platform. So then, as an investor, I can obviously want to get more information about my portfolio. Sorry. I can't see. Yeah, can you always see my screen? Yeah.
Yes, we can see free search.
Great. So now I go for free search. And I can access the more data, and Lucia already showed you this, but if I want to compare Vitas with its country, that's how I can refine the benchmark I want to get. So here you go. You have Vitas par 30 against its country average, its restructured portfolio, number of borrowers in rural areas, female, etc., etc. And then I can also want to check my global portfolio against the country, against the countries, like the average data of the FSPs in the same countries as my clients. So this is, Lucia told you right before, like when you go for portfolio, this is PROPARCO, and I can access only this one. And this is the benchmark, like with the countries of the FSPs I'm working with. And this is how the par 30 of my portfolio evolves against the benchmark, the countries of my FSPs. So this is very interesting, and you can always download and save to PDF. So basically, that's to give you an idea of how we can use Atlas as a social investor. And now I would like to tell you a few words about how it went with Atlas. So as PROPARCO Financial Inclusion team, we feel very lucky to work with Atlas. It's been very easy to work with Lucia and her team. They are very efficient. They are solution driven. They are always willing to help. So thank you, Lucia, for this. I know you don't like this kind of moments, but as during the introduction with Daniel. And yeah, as I told you, they go through the whole data they receive from our clients. So and it's you know, they check all the data and they come back to the client if there is anything they want to check on the data they receive. And so that's very useful because that's what we couldn't do before in our portfolio monitoring tasks because of lack of time, basically. And so they do this last step, and yeah, and then you can go on the platform, which is very user friendly. So it's easy. And Lucia and her team, they are always searching for feedback to make it even better. So do not hesitate to subscribe because it can get better together. And yeah, the final words I would like to share with you that I think that Atlas should be used as a common platform. The idea here is to reduce the MFI's reporting burden, because we know it's heavy to report to each and every investors. And it's a win-win situation, because they will provide data, the Fsps, the MFIs, they will provide data only once to the multiple investors which will subscribe to Atlas. And from a social investor point of view, you know, it's very useful to get all this data, and at any phase of our work, I mean, during identification, instruction of the projects, at any time, it's very useful. So finally, we see that the subscribers are growing, and we encourage others to join for a more collaborative work around data. That's it for me. Thank you, everyone. And I will hand it over to Alex from CGAP.
Thank you, Pauline. Thank you also to MFR for the opportunity to speak here today, and to the FinDev Gateway for hosting this webinar. And of course, to all of you for making it up to this point, 40 minutes into this discussion. I see quite a lot of you in the participant list. So this is clearly a topic of great interest. It looks like there are a lot of really good questions in the chat. So I'll try to be relatively quick so that we can get a chance to get into some of those questions. But what I thought I would do is just give you a bit of a story of CGAP's response to the COVID-19 pandemic. And that's a story in which MFR plays a pretty significant role for us in supporting us through data and data analytics. The story starts around April of 2020, when CGAP started coordinating and putting together a plan to respond to the pandemic's impact on the financial inclusion sector writ large. And there were a few big areas to that response effort, including a focus on customers, on digital payments, and a big part of it was engaging with the microfinance sector. And one part of the work in engaging with the microfinance sector was related to the theme that Daniel Rozas so eloquently described in his opening to this webinar of lifting the fog. We noticed that there was this gap in the absence of the mixed market data to give a comprehensive view on how the microfinance sector was doing in terms of its financial health. We thought that would be one area where we could contribute, at least temporarily, to help stakeholders in the sector better diagnose what's actually happening, and then make better decisions about how to respond to what was happening. So we started looking around for partners who could collect the data globally, who could analyze the data, and also host a platform for us to share the data with the broader community. MFR, of course, quickly came to mind, and around May of 2020, we started working with them using that Atlas platform to collect, analyze, and share data. And that data made its way into several parts of CGAP's MFI crisis response efforts. It looks like there was the blog series that you just saw. Here you'll see more of the actual analysis itself. We also hosted a portal, which Atlas was had the module to share the data itself, and then the analysis here, as you see in the blog series. So this series, the data, the efforts, I think were well received. We got a lot of positive feedback. Unfortunately, the sort of response rates to our pulse survey started declining, and so we were sunsetting this, and the pulse survey itself. We were looking for other data sources. We also entered into a partnership with Symbiotics to use their data and published some of analysis there, which we thought was also helpful. But in the absence of this really global comprehensive database that Mixed Market used to have, we were trying to look at things from every angle. And so we continued working with MFR, and around the beginning of this year, so early 2021, we again re-engaged with MFR and Atlas to merge what we had from our pulse survey, what they had from on the Atlas platform, and combining that and starting to do some analysis on what was happening in the sector, some of the trends with respect to portfolio quality, liquidity, provisioning, and then sort of the total credit risk as one of the drivers of the risk that we were seeing in the sector. And of course, all of this building off of the efforts that came before it. So here on the screen, we see kind of the big global picture of how credit risk was manifesting itself. And as we know, through the pandemic, a big source of the uncertainty was what's going to happen with that restructured portfolio, or the portfolio that's under moratorium. So we worked with MFR to do some stress tests that were more forward-looking, based off of different scenarios of what would happen if the portfolio performed in a certain way. And the results of those stress tests were very informative to us, and we hope to the sector on different ways this sector could evolve. And as you can see on the screen here, in the base case scenario, and without going through all of the assumptions and what it all means, but just in that base case scenario forecast where you see the 42% number, basically what we're saying there is that in this base case, we expect around 42% of MFIs to face some sort of potential solvency risk, with a deep red color there being really high risk. So of course it's a minority, and if you were to look just at the average of these numbers, the average would be fine. But we think it's important to note that there is this significant minority there who are at risk, and where that risk tends to be more concentrated, we believe, are with the smaller institutions, with particularly ones in Africa. And this analysis, these conclusions have driven some of our efforts. We recently, in fact, just this week, published a paper in coordination with several other stakeholders who we've been working with, in particular DFIs, to think through where things are headed and what still needs to be done. And Lucia helped write a blog on this subject. Again, this data, this analysis formed the cornerstone of our diagnosis of what's happening, and therefore our recommendations of what's needed, which you can see in this paper. So definitely encourage everybody to check that paper out who's interested. But getting back to the partnership with MFR and the Atlas platform, what we were looking for was somebody who could work with us, who has excellent capabilities with respect to gathering and analyzing data, who can put it into a platform that we can share with the world, and of course be hard to find a better partner for those issues than MFR and using the Atlas platform. And throughout all of this, it's also important to say that they were also very helpful and easy to work with. There was a lot of uncertainty. We had to iron out a lot of issues as we went through this, privacy settings. As we were collecting the pulse survey, we wanted to ensure the privacy of the institutions who were sharing their information with us. So we put a lot of efforts into thinking through what's the best way to protect their privacy while also sharing our diagnosis with the world. But throughout the course of all of these efforts, we found MFR and Atlas to be great partners. So that's all from my side. I'm happy to answer any questions. I see there's a lot of other questions in the chat, so it'd be great to start getting to those. So I think at this point, Daniel, over to you for the moderation.
Thanks, Alex. And thanks to all of you. So we have a ton of questions. I'm going to do my best to pose them. I think most of them are really to Lucia. So Lucia, you ready? I think we're going to start going through these pretty quickly.
Always.
All right. So the first question was proposed originally by, so I'm going to skip those that were answered in the text. So if your question was answered, so I think Gael, your first question is answered. So Amelia's question was, how does MFR ensure the accuracy of the data? So maybe you can go briefly through that process of calculating that reliability score.
Right. We are a bit obsessed, to tell the truth, as we come from a rating agency background. So we are the people who spend 10 man days on the field with an FSP to review data in head office, policies, practice, field, focus group. We are that kind of people. So what we do is the following. Any data that comes into the platform is welcome, provided it passes a basic consistency check. This means that the data do not display internal inconsistencies or gross mistakes that are plausible or clearly visible. This applies to all the data, and it is the essential condition to receive a reliability score of at least 1 out of 4. Reliability of data can increase depending on what additional vetting and checks the data receive, including what checks are done and who performs the check and how independent is that entity from the FSP of which the data are. Some of the subscribers are happy with just the consistency check. Others prefer more in-depth validation services, which are on demand. What we do in that case is we not only receive the data on an Excel, but we also receive the financial statements, portfolio reports, annual reports, what is needed to triangulate the data, and in case of inconsistencies, flag and dig deeper. In those cases, which are similar to a rating approach, then the reliability of data increases. However, any data is welcome, provided it passes at a minimum the consistency check, not only the highest reliabilities, so that users can decide if they prefer a larger sample with mixed reliability or a smaller but with highest reliability.
Great, thanks, Lucia. So another question that was actually raised by a few folks, so kind of a two-part. Can you maybe briefly describe the process by which FSPs provide data, and also the mechanism that what they can access as a result of providing data? Do they have to subscribe to Atlas or not?
Right, with great pleasure. So financial service providers can provide data directly by themselves or through an aggregator. It can be an investor, as it is the case of PROPARCO investees. It can be an international network, as it is the case for Opportunity International. It can be a professional association at regional or national level. In any case, by providing data, the financial service provider receives for free access to the benchmark overview, which is the simple page we have seen with fewer analytics, but still available for free. Data can be provided either through an Excel that is available on the platform and can be submitted to the platform. Submitting doesn't mean that data directly go to the database. That would mean killing a database, but it means we receive an email with the data, we check and then we load. Or we can establish APIs, for example, with the system of an asset manager to synchronize at a preferred frequency the data and receive them, provided that the financial service providers authorize their asset manager to share data, so that we receive them automatically without additional reporting burden for the FSPs.
Okay, great. You mentioned, Lucia, also on the frequency. Is there a particular standard frequency that you use, that you expect FSPs to provide?
Annual is good, but any frequency is really welcome. It can be once every 3 years, it can be every month. We literally load data every week, so data is welcome anytime. This is, by the way, where you can download the Excel report and submit.
Okay, all right. One very short question. Do you have pricing data on PAYGO companies, and maybe more generally, do non-MFIs such as like PAYGO providers report also to Atlas?
Right. We fully agree that pricing is important, and we will never manage to manage our industry, and in general, the industry is working with the bottom of the pyramid reputational risk without managing responsible pricing. At the same time, unfortunately, pricing is extremely sensitive as a topic, as you can imagine, let alone the complexity of it, which means that pricing is actually the one area where we have the least data on the platform. To give you an idea, for one APR data point, there may be 20 financial data points. So we are still building that culture, and we are confident we will get there, but it is a matter of time and incentive of transparency in pricing with the financial inclusion industry. Other emerging industries are also welcome to be transparent in this sense and to manage expectations in this area. They may not have reached that level of consensus yet, but so that pricing data are not collected for now, for example, for the PAYGO space. But when the sector will be ready, we'll be ready too.
Okay, great. Another question, there are a couple of people who touched on this as well. So actually one is very specific, but I think there's a broader implication. So Christian asked, who is the owner of the underlying data? And I think that also relates a bit to a question that was posed, I forget by whom, to Alex, which is, if you're a CGAP or you're another organization and you're using this for benchmarking, do you need to go back and ask permission to use the data that's on Atlas from the FSPs that reported it?
That's a great question. So one very important thing is that MFR is owner of the software of the house, but the ownership of the data points itself never changes. And so MFR is only owner of the data MFR reported, and not of the data that are reported by financial service providers, investors, international networks, etc. That ownership never gets transferred, which is why at any point in time, any data provider can request to remove the data, for instance. Data that have not received the authorization to be shared cannot be loaded to the platform. So Atlas subscribers can be sure that they can use, in the way allowed by the subscription contract, the data they find on the platform freely, because they have already received the approval from the providers.
Okay, great, wonderful. And another question again, two people asked us. So Gael asked about, is the SPI4 benchmark based on Ceriz's public benchmarks, or is there additional info used in order to generate the benchmarks? And also on the point of SPI4, are those benchmarks comparable to those that are used by the Linus tool?
Right, so indeed, this is Ceriz and Atlas have a partnership whereby the Ceriz database, which has received authorization to be shared on Atlas, is synchronized on the platform. So this is this content comes directly from Ceriz, and Linus is also available here. It is not something different. And please, if there are Ceriz colleagues, please feel free to chime in as well.
Okay, well, so this is a shout out to folks on here who are from Ceriz. I see Bonnie is here. Maybe Bonnie, before we get to the details, there's so many other questions on Atlas. There was one question. I'm just scrolling through here. There was one question on the smaller FSPs, and I think there was also a question on onboarding. And I think there's a more general question. So if you're talking about an FSP that's not very big and that's presumably not reporting through an association or through an investor, but it's actually trying to report directly, is there some sort of an onboarding process? Is there something that some support structure that they can use to report data to Atlas?
Right, there are some videos to explain how this works and how to join. We are always available for calls. That's always a pleasure. And the template itself that can be used to report is available here. In case it is a financial service provider which plans to report on a regular basis, we'll be happy to go through each and every cell of the Excel together the first time to make sure that there is comfort and clarity around what data need to be reported.
Mm-hmm. Okay. There were a couple of questions on the size of Atlas. So how many institutions have reported, and also in comparison to the mixed market. So maybe post mixed market, so excluding the data that's uploaded from there, how many institutions have reported to Atlas directly or via a channel, right, through an association? Or
so our standards of service to subscribers are the following. At any point in time, there needs to be at least 500 financial service providers with data of the current year or previous year. At any point in time, there needs to be at least 1,500, we're almost there, financial service provider data for the last 3 years plus current one. And without any limitation in terms of how recent data are, there are in total 3,500 financial service providers on the platform. This is the coverage for today, but we have great plans, and with more subscriptions, we would like to increase this coverage substantially.
Mm-hmm. Yeah, and I think this is a point I would emphasize, especially to folks thinking about Atlas. This is one case where you're really talking about the sum of the parts is greater than the whole is greater than the sum of the parts. So the more people report, the more valuable the platform becomes as well. So just a shout out to people thinking about it. We still got, well, we're actually over time. I don't know if we can continue. We have so many questions. Can we go, Abby? Can we go over a couple of minutes, or we should?
Sure.
Okay. All right. So if you folks don't mind staying on for a couple more minutes, we have a lot more questions that I hear. So there is a longer question from Marianne. What would be the advantages of Atlas from the point of view of a national network of MFIs that's mandated to gather data on its members on an ongoing basis? And could Atlas also come with an integrated system for such a network to share data internally? Or is it exclusively based on data reporting from individual MFIs directly to Atlas?
Right, that's a great question. And we have partnerships already in place with both national level associations and regional ones. So what happens is that we can provide the template, or we can use the existing template they use. The networks or professional associations can still gather the data from their investees. And one of the advantages of Atlas is that they don't need to consolidate those data on their end anymore, but we can do that for them so that the association gets access to on the platform to the individual members, as well as the consolidated view for the association. Plus, each member of the association gets access to the platform with a benchmark overview with its own data, as well as the average for the region or for global. So advantages are in terms of easier consolidation of data, as well as access to benchmarks.
Okay, great. Thanks, Lucia. And Alex had to run, but we still have some more questions. So I'll just take a couple more. I think we'll take it to maybe 5 minutes past, and then we'll have to stop at some point. So one question was on the size of institutions. Kind of, there are two questions actually. George Florin asked this, and someone else asked. So if you look at the distribution of institutions that report to Atlas. One, do they tend to be predominated by large MFIs or large FSPs? And also, do you see any significant, any interesting variations among the types of institutions that are reporting in terms of co-ops or MFIs or NBFIs and the like?
Yeah, if you can still see my screen, it's really very comparable, the share in number of FSPs between large ones with total assets more than 100 million, medium 10, 100 million, and small, less than 10 million USD. There are for sure differences. Size matters a lot in many ways, but we try to be comprehensive and inclusive of different types.
Okay, all right. There was also a question on pricing. So one question is the pricing calculated on the basis of data provided to Atlas, and then there's a second one. Is Atlas platform providing data related to FSP's average weighted interest rates for loans and borrowings? I guess that would be across the portfolio, right? If I understand right. Maybe just how do you calculate? How is the pricing reported and how is it calculated?
Right. There is one thing which is worse than not having APR data. It is having wrong APR data, which is unfortunately very easy because of how complex it can get. So indeed, we do take care of the calculation, even if in case of some partnerships, once we see the process that is used, we can always house APRs calculated by other reliable organizations. APR is available at 3 levels: one single loan to Mr. John, a loan product, business loan, or a financial service provider as a weighted average of all the loans.
Okay, all right. I think I will need to. There's one more question that I will pose, which is a quick one. Do you have a handout describing the data sample that can be emailed to participants? So just some sort of a brochure or something that can be shared to everybody who logged in. I guess
Sure.
To the webinar.
Yes, let me share in the chat box this page where videos and brochures are available.
Okay, all right, great. And then just as a note, I can see Yusuf shared a number of emails from the MFR team. So if you guys want to follow up, they're there. I think we're well over time now. So despite the still outstanding questions, I'll have to draw it to a close. This is clearly something that's generated a lot of interest, and hopefully it's just the start of more, and maybe there will be additional sessions organized on other platforms if they're needed. And but I'm going to turn it back over to Abby. Abby, take it away.
Yes, thank you very much, Daniel, and all the panelists and participants for such an engaging discussion. Before we close, I just wanted to mention again what's next. As I said at the beginning, we will have the webinar recording and presentation shared on the FinDev Gateway website, and we will follow up with an email to all the people who registered for this webinar to share the recording. Also, if any of your questions were unanswered or you have more questions, as they already mentioned, you can contact Atlas at the email on your screen, as well in the chat box. There were a couple of emails shared. And as always, for more financial inclusion resources, please visit findevgateway.org. And finally, we'd like to hear from all of you to get your feedback. When you close your Zoom window, a brief survey will appear, and we'd really appreciate if you can just take a brief moment to respond to those survey questions. So once again, a big thank you to the panelists and to all of you who joined the webinar today for your questions and engagement on the topic. Thanks, and have a good day or evening, wherever you are. Thank you.
Thanks a lot.
Thanks, everyone.